So I want to thank you for watching the upcoming presentation that I'm going to give on selling short-term care insurance. This is a presentation for insurance agents. We're going to take about 40 minutes, and we're going to focus on Recovery Care 2, which is a short-term care insurance product offered by Standard Life and Accident Company. If I can move the mouse. Okay, so hi everybody. My name is Jesse Slome. I'm director of the National Advisory Center for Short-Term Care Information. So we are the nation's organization that is existing to create awareness among consumers and among insurance professionals like you for the value and benefits of short-term care insurance. We do appoint agents to sell all of the leading insurance companies. So if you are not already appointed with somebody and you'd like more information after watching this, please feel free to call us. What I'm going to do today, as I explained, is focus on one particular product. This is Standard Life and Accidents Recovery Care 2. I'm going to give an overview, a quick overview of the company. I'm going to focus a little bit on the market for short-term care and a product overview. And then we're going to conclude with what I call the best part, the sweet spots. I've looked into these products, worked with a number of leading insurance professionals, some of them who sell long-term care insurance, and I'm going to identify some sweet spots and some success strategies to get you started selling successfully this particular product. So you're going to hear me focus a lot on single women who are alone because in my mind, one, that's a great opportunity, and two, it's a definite sweet spot for this product, as you'll see if you stay tuned. So again, why watch the following presentation? I always want to give you a couple of, going into it in a minute, why you want to stay tuned. I'm going to talk about tapping the real market, and because this is the thing that I think is rather unique and special about the Standard Life product, and I'm going to spend a minute or two talking about that at the end. If you sell the concept to a prospect or a client, Standard Life will actually have their staff complete the application with the client over the phone. That is as an incredible service that they provide to you, and that I think makes this a very attractive proposition. So just a quick overview. Standard Life Insurance. A lot of you may not have heard about the company. What I say is they're certainly not the smallest insurance company in the world, neither are they the largest, but they are substantial. They've been around since for almost a century. They have A ratings from AM Best, and the parent company is selling in all 50 states. The Standard Life product that we're going to talk about, and Standard Life offers products in 46 states. I'm going to give just a 5-second disclaimer for anybody watching this because, I am not an employee of the company. My intent here is to provide you with obviously accurate facts and information, but if I'm mistaken on anything, or if anything changes from the time that we're recording this on July 13th, 2016, please accept my apologies and understand that I'm not perfect. I'm not an attorney. I'm just an opinionated marketing insurance professional. So that said, the responsibility is on you to make sure that that you do everything correctly, and I thank you for that. So let's focus on the market overview. A lot of insurance agents who are watching this sell long-term care insurance. And so I'm going to spend a couple of minutes telling you that short-term care insurance is not just long-term care insurance light. There are some significant and important differences, and there's never one right answer for everybody. There are multiple different answers, but there are many long-term care insurance professionals who are what I call dedicated, passionate pros, but they have blinders on to any other solution other than long-term care insurance. And the problem is traditional long-term care insurance is a great product, but it is increasingly hard to sell. And I'm going to explain what's going on. It has nothing to do with the fact that there's need. We all get it. There's enormous need to do long-term care planning. If everybody made a decision based on need alone, everybody would buy the product, but everybody doesn't, clearly. And so the little graph on the left shows that back in 2000, 750,000 individuals purchased traditional long-term care insurance. In 2015, the number was just about 104,000. So the sales continue to decline. And that's for a whole host of reasons, but price is the number one reason. If you look at the chart on the right, you can see that the vast majority of buyers today have median incomes of almost $90,000, and 77% have median incomes of greater than $50,000. But you're going to see that that narrows the market for long-term care insurance as a solution. So need is important, but price is the most important factor, and that's what you need to understand why short-term care insurance is such a viable option for you to start thinking about and to talking to people about. As I said at the onset, I'm going to focus on a significant segment of the market, which is older women who are alone because they're widowed, they're divorced, they're single. People often refer to it as older women who are single, but in my mind, you're single until you're about 35, and then there's a different different term, but we haven't come up with one. This is a significant segment of the population of older Americans, 65 plus. So if you look at it, especially among women, you can see that 34% have been widowed, 16% divorced, 5% are single or never married. That is more than half of the older women. And so you have this huge market out there that is not being addressed, certainly by traditional long-term care insurance, because most LTCI policies are bought by married couples. And so I showed on the slide before how important income and assets are to folks who buy it. People who buy it have incomes generally of $50,000 or over. So if you look at what's happening at persons 65 plus, only 1 in 5. So you really narrowed the problem why long-term care insurance is not selling is the market is not everybody. It's only people who can afford and who can help qualify for that particular product. And that makes the market segment very narrow. So one last slide on this, just to help, as I call it, for those people who do have their blinders on and who say, but, Jesse, everybody, if they only understood the need for long-term care, my God, they would buy this product. Well, the truth of the matter is prices have gone up. You know that. Now, Social Security benefits have not gone up for seniors. So the average Social Security benefit for a retired woman was $1,000 a month. And now look at the right side. I just ran premiums for the typical long-term care insurance policy that an agent's going to sell today. Company A, so it's $3,300. Company C, $4,300. So can a retired woman, a single woman who's age 65, who's earning about $1,000 a month from Social Security, maybe she has a pension, maybe she has something else, is she going to spend $300 or $400 a month for long-term care? The answer is very unlikely. And so that's why the market is so small. Now, then people, the long-term care insurance professionals, or just those of you who are watching and looking for more information, look and go, but, we need to sell these people long-term care insurance because they may have a catastrophic need that lasts for many, many years. And that is certainly true, but if you look at the actual data, and the industry now has a significant amount of data, 41% of long-term care insurance claims last less than 1 year. That's almost half. That means people who actually go on claim, their claim is going to last less than a year, which if they had a short-term care policy, their policy coverage would have been sufficient. I'm not going to deny that some claims do last longer. 17% of claims will last more than 5 years. So, it is, at the end of the day, insurance. You can't tell whether you're going to use it, whether you're not going to use it, and for how long. But for those people who look and say, we need to sell everybody 3 years of coverage, That's not necessarily true, and I need for folks to understand that, because my personal belief is that some coverage will always be better than no coverage at all, and some coverage, as you'll see as we go through this, is certainly going to be cheaper, and that means people who are controlled by the amount that they can or will spend for insurance will choose to buy some coverage. You are not doing them a disservice. You'll actually be doing them a service. This slide really just, repeats again a little bit, but for the people who really look and say, but I got to see more numbers, if you look at it, this is, we call it long-term care, but most claims are not long. Most claims, as you can see, for men, half, and for women, almost half, of people will have no real long-term care need, as defined by really being a need for 90 days or longer. So a lot of the numbers that you hear about, this 70% and all of that, that's a very loose, generalized definition of long-term care, which includes IADLs, not ADLs, and care that's typically less than 90 days. So people needing long-term care where they would be getting a benefit from their long-term care insurance, as you can see, literally in this particular study, most of the claims are going to be none or a year or less. And in terms of how much long-term care costs people really incur from age 65 until death, yes, some people, 15%, will have claims that are going to be $250,000, but if you add all of the bars to the left of the two right ones, you're going to see that the vast majority, over 80%, of claims are going to be under $200,000. That's not to poo-poo it, but those would, again, all be dealt with a very adequate short-term care policy. So that's why when you look at the data, when you understand that price controls the market, that is why I am such a passionate advocate today for short-term care insurance as a viable option, as I say, when age, cost, or health is an issue. And that's a large segment of the population. So now let's start focusing on the Standard Life Recovery Care 2 product. First, this is primarily a nursing home product, and I will tell you, for the many agents that I've talked to before preparing for this, you have to understand, no one product ever suits everybody, is ideal for everything. I'm going to tell you the pros and the cons of this product. This product was designed primarily for older Americans who are concerned about the risk of being in a nursing home. But one of the nice things about this product is it does pay 75% if you qualify and need care and you're in an assisted living. And everybody when they focus on long-term care, they think about nursing home care. The truth of the matter is people who plan, people who have assets, nursing homes are actually the location of care, the last resort. I call all of these products nursing home avoidance insurance, and that's what they are. There is an optional home care rider. We're going to focus on it. I'm going to be very honest and say the good news is it's a very low-cost rider. On the downside, it's lower in benefits than many of the other products that are out there. But when cost is an issue and someone wants some home care, this product is going to provide it. Now, some of the real pluses that you're going to hear me focus on. First, this policy uses unisex rates for pricing. That means that men and women pay the same. This is ideal for women who are alone, those single, widowed, divorced women, because their income is lower, their need is higher, and this product, as you'll see, is going to be there's a real sweet spot for them. This product offers a very unique 20% preferred health discount. So when you are talking to younger women, and when I mean younger, I mean women in their young 60s, 65 is what I'm going to focus on for this one, that 20% discount, and many of them can qualify. I'm going to show you the slide where we have the information. that is a significant savings that competition doesn't offer. And there are two inflation growth options, a 5% simple and a 5% compound. I think that is important as you're discussing this product, but wait till you see the rates. Some of the benefits that I will focus on is there's no 90-day certification for benefits. I'm going to have a slide where I'm going to explain that because it's often new insight for people. Agents love the fact that this policy has a bed reservation benefit. That is really important when you're talking to people, because a lot of people will go into a nursing home particularly, and they will come out because they'll have to go back to a hospital or they'll need some other care, and they don't want to give up the room that they've been in. This bed reservation benefit is really important in terms of it's not utilized all that much, but it's a great selling feature to talk to the prospect and the client. There's waiver of benefits, waiver of premium when the person's on benefit, and that is also, I think, a really nice feature that in this particular case this short-term care policy offers. And they will restore multiple times up to the maximum benefit of the policy. That's important with short-term care policies because they are exactly that, short-term. So some people will have a need, then they'll recover, and we'll see that many people do recover, and then they'll have another need. Recovery Care 2 is available currently in 29 states. Those are the little purple states. And for folks who sell in Pennsylvania, Maryland, Rhode Island, and Idaho, for other states that we did not highlight on this, there is Recovery Care, which is basically the same policy. So you can, everything that you're hearing that we talk about, everything is the same. The difference is in those states, the product was filed in conjunction with an association. I'll spend a second talking about that. You have to pay $1 a month to become an association member. If you're watching this online after we recorded it live and your state isn't highlighted, you can always call the National Advisory Center and we will tell you what product, what states have been added, where the products are available, and if it isn't available in your state, what the other options are. So, positive points. Basically, on the left, you can see the reason, as I would tell people, that the type is a little bit fuzzy. It's very simple to explain this product. Everything is contained in a rather easy to read, easy to understand little consumer guide. And what I did was just literally scan it out of there and paste it into the PowerPoint. So this covers, the options. I like the fact that it has a 0-day or a 20-day elimination period. That is, as you'll see, important, especially for women who are on their own. You qualify for benefits. The descriptions are really easy. When you trigger 2 of the ADLs, when you have a cognitive impairment, or due to medical necessity. There is a significant benefit, or I won't call it significant. There's a benefit to a medical necessity trigger, which most people are not aware of and a lot of people question. So we're going to spend a couple of minutes. I literally talked to the director of claims and highlighted situations which I'm going to share with you when a person, a policyholder, could qualify for benefits even though they're not cognitively impaired, they have not triggered their 2 ADLs, but they have a medical necessity. And that's one of the things that I like about some of these short-term care policies, that not only are they more affordable, and not only in some cases are they a little easier to qualify for, but you're going to get faster access to benefits. So let's spend a minute or two talking about medical necessity. And I'm not going to read all of the slides. Ultimately, we'll have all of this posted online so that you can pause it and read. But I started talking to professionals in the long-term care insurance field to say, okay, when would a policyholder who would not meet their ADLs or cognitive triggers get benefit from a policy because of medical necessity? And the answer is when the physician says care is needed. Okay, that's basically the what is required is the physician. So what does that really mean? How can you convey that to a policyholder? Well, people who have cancer, they can obviously function. They're not going to meet their ADLs or their cognitive triggers, but they could have a medical necessity that would either they might be needing, some services and some care. Yes, typically maybe we'll focus a little bit on assisted living because that's where I see a real benefit for this and a benefit to convey to people, because more and more seniors are realizing that they need and are moving into these types of assisted living settings when they have a need, just because of aging. So two other examples. An elderly man who couldn't manage his oxygen. He could totally function, but he could not manage, I have an extra R in there, he could not manage his oxygen, and so that became a medical necessity to prevent him, obviously, from, having a significant problem. Or an elderly blind woman. She could function, but she could not give herself the injections that she needed to manage her meds and her diabetes. So again, these would be considered medical necessities in conjunction with aging that would trigger a policy like this. This is the long. I'm not going to read this, but I'll spend a minute on it so that if you're watching and reading online, you can kind of get a sense. So I had a long conversation with the director of claims, and I said, okay, when would somebody need this for home health care? Medicare does not cover or allow benefits. So this was an 85-year-old woman. She fell. She was admitted afterwards to a skilled nursing facility for 45 days for rehab, and then released for home care, for physical therapy, occupational therapy. So Medicare only covers the first 20 days, and then home care for physical and occupational therapy only. The policy in this case would pay the daily benefit for the remaining 25 days of the nursing home care, and it would pay 75% to the home health care agency. This is not, homemaker services. These are defined as home care services for folks, but not everything is covered, as people know. Sometimes also people will want or benefit from more coverage than Medicare will provide or pay for. And so that's, for a policy like this, it's not be-all, end-all. It's not going to have somebody come and move into your house. It is not in this particular case, the home care benefit is 75% of the daily benefit up to 90 days. So it is limited in nature, but I'm going to go back to reminding you what I said at the beginning. This is a low-cost feature. And so for people who are on a budget, some care is going to be better than no care. And again, most claims are for a limited period of time. Same thing if you have folks, and this is something where I believe this is a selling sweet spot for this product. Most people understand that they are not going to go into a nursing home and that they don't want to go into a nursing home, that they will spend a period of time, if they reach an older age, 85, 90, etc., that they are going to live in an assisted living setting. And that's where a policy like this can become really, really beneficial and helpful. Because as you can see, you got an 86-year-old man who was hospitalized for pneumonia. But then he was released, not to a nursing home. And also, by the way, Medicare is kind of now rearranging when they release people, because nursing home settings are so expensive, they're trying to control costs. He went to an assisted living facility where he could get the level of care that he needed, which wasn't the maximum round-the-clock nursing home care. This policy would have paid for benefits because he's in an ALF. Same thing. 79-year-old woman, dizzy, risk of falling, doctor sends a letter. This benefits people. Now, I want to go back to why it benefits single women in particular. And this is, I'm going to focus on that when I get to the difference between a 90-day certification period and a 90-day elimination period. I talk about the 20% preferred health. This again comes right out of the underwriting guide. You know, I won't say that everybody qualifies for preferred health rates. We live in a country where a lot of older Americans are now obese, have health issues, you know, etc. But you are going to come across a share of healthy 65-year-olds, and when you do, who can meet the height and weight chart, this becomes a very viable product for you to talk to them about because of that 20% health discount. And basically, if you're working hard to stay in good health, why not buy from an insurance company that looks and says, hey, you deserve to benefit from that? So I talked, and I'm taking a pause so that your eyes don't glaze over. I talked about one of the benefits of short-term care insurance is faster access to benefits. What do I mean by that? If you look at the little image that we created and that we use on some of our marketing material, long-term care insurance is the woman on the left on crutches. In order to qualify for benefits for long-term care insurance, you must, as a policyholder, meet two criteria, and that's really important to understand. Everybody focuses on the elimination period. Oh, you have to meet the elimination period. But that is not the only hurdle that you have to overcome. You must be certified as needing care for 90 days or longer. That's why it's called long-term care. Now, short-term care is the image, the woman on the right. You do not have to meet that 90-day certification. So it is a very different product and a very different concept. But here are the important facts and why this is such a benefit, in my opinion, especially for women on their own. Well, agents who talk about long-term care planning often will throw in there, oh, we all know somebody who had a hip replacement or a knee replacement. My God, there's hundreds of thousands of these done every year in the United States. They've become so common, and not just for people 65 and older, for younger folks. Well, a hip or a knee replacement would not meet the 90-day certification generally. Sometimes it might, but very rarely. The doctor will look and say, no, the person who just went through this is expected to be up and functioning, able to do their ADLs within 30 days, 60 days, certainly not 90. Now, they're still going to need care. And they're still going to need care that's not going to be covered by Medicare. And who's going to provide that care? If long-term care insurance doesn't pay, typically it's going to be a spouse or a family member, or they're going to force themselves to pay for care. The reason that short-term care is so important for women on their own is women don't have a spouse, and they may not have an adult child who can provide the caregiver. So if they had a short-term care insurance policy, that policy would give them some benefit, some earlier access to care. And that's, again, why I am such a strong advocate of short-term care for certain segments of the market, women on their own in particular, because they're going to get that access to care. The other reason that I want you to rethink the long-term care planning as we start to get into rates, and I always look and say, yep, there still are so many people that have their blinders on because cost is always an issue. So I take the approach. I never say to an agent, hey, you should only sell one solution as a one-size-fits-all. To a degree, that's what's created, I guess, sort of a disconnect for traditional long-term care insurance, that often too many people approach it as a one-size-fits-all. Here's what everybody buys. Here's what I recommend. Then people look at the price and they get sticker shock. In my mind, you take a good, better, best approach. And in this particular case, I'm going to say that good coverage is 1 year, a short-term care, 360 days of coverage with no 90-day certification. That means you're going to get some benefit, easier access to your care. Better would be 1 year with no 90-day cert and 5% growth. That's what we're going to focus on, because most people will, when you see what we're talking about in terms of cost, will understand the benefit of the 5% growth. And the best is, yeah, what everybody typically sells, 3 years with inflation growth. The magic price point, this isn't me making this up. This is major insurers that have done lots of consumer studies. The magic price point of where consumers will look and say, yes, I'm willing to act and to buy some coverage is $100 a month. Lastly, again, why is 360 for those people that still look and go, but that better is so important, 3 years in inflation. Why is 360 days good, in my opinion? I'm going to repeat. 41% of claims last less than a year. People recover. They have sudden terminal illnesses, or they only need non-caregiving benefits for a short time. And again, don't forget that this policy has a restoration of benefits provision, which means that often people who will use their claim for a short period of time may use it again later on. That makes it really beneficial. And lastly, I love traditional LTCI insurance, but I'm putting a red type and a line through it because for women on their own, that 90-day certification and the 90-day elimination period is going to keep a lot of them from accessing benefits, whereas short-term care insurance with no 90-day certification and a 0 or 20-day elimination period is going to give them faster access to benefits. So for those of you who look and say, no, they have to have the Cadillac of products, good, keep pushing it. But for those of you who look and say some coverage is better than none, this is the perfect solution. So let's look at some real sales examples. This is Standard Life. This is a daily benefit of $150, a 360-day benefit period. 75% of that would be for assisted living. 75% would be for home care. Granted, I want to remind you, for 90 days. A 20-day elimination period. But, as I said, I've added for a 65-year-old woman here a 5% simple compound inflation, and their 5% simple compound goes for 20 years, which basically doubles the daily benefit. And at the end of 20 years, the 65-year-old woman is 85. So yes, her compounding stops, or her inflation growth, not the compounding, but the inflation growth stops at age 85, but that's fine. This is actually an intelligent way to approach it. So what does this mean? At age 85, which is most likely when the client's going to need care, the daily benefit has grown to $300 a day for skilled nursing home, 75% of that for assisted living, $108 maximum benefit for skilled nursing home, and a $225 per day maximum benefit for home care, all for $100 a month. That $100 a month is the magic sweet spot. Now, let's compare. What does this really mean? Because you can't live in a vacuum. So, looked at another leading short-term care policy. Yes, everything being the same, the difference is this one has a richer home care benefit. Great, that's terrific. With 5% simple compound inflation, if this would be a little bit better option, if the client could afford it, I'm never going to say there's one size fits all, but the premium is now $2,000 a year, and that's going to be a psychological price point for many people. And then on the right-hand side, there's a leading long-term care carrier that is just starting to promote basically a tweaking of their TQ policy down to a one-year policy benefit. So what does it cost? $150 a day, one-year benefit, 50% for home care. I tried to kind of, make more of an apples-to-apples comparison. This one has a 30-day elimination period, and don't forget, it has a 90-day certification requirement. You add a 5%, and now you're looking at a little over $200 a month. So you're going to pay twice as much, and you're not going to have as fast access to benefits. This is why I believe if you're dealing with 65-year-old women who are in preferred health, and even if they weren't, the Standard Life policy would add 20% more to the cost, which would still make it affordable, that you're going to have a real sweet spot for this. Now, many people prefer, and there's nothing wrong with compound inflation. Certainly, compound inflation is a great option if you can. It's going to grow your benefit faster. And so you could look at a client and say, well, if you want a greater benefit, this particular policy would have $286,000 of potential nursing home benefit for about $150 a month. Now, compare that to the right-hand column. This is that top long-term care carrier with their one-year policy. Again, remember, half for home care, 30-day elimination period, 90-day certification. Look at the premium dollars, $5,000 for a 65-year-old single woman. So if you were showing somebody and you wanted to show them and say, let me show you why this is such a deal, all you have to do is show them this and say, you got a choice. If you want this, it's going to give you a little bit more home care potentially, less access, less fast access to benefits, $5,000 premium. In my mind, that left-hand column, the standard life product, is the easy and the very viable sale. Now, I will not tell you that, some short-term care policies have very simple applications, as few as 4 questions. This isn't one of them. I will tell you that literally, just as we are doing this training, and that's sort of why we've scheduled this now and held off till now, Standard Life has just announced easier underwriting. They have looked at what competitors and other companies do and have learned, and their underwriters have removed a number of uninsurable conditions. I'm not going to read them all. I'm going to say, if you obviously want to focus on this product, you need to focus on the underwriting guide and get the latest. But certainly Standard Life has heard feedback from distributors and others like us and from agents, and they are making it easier for you to get more people approved for this product. They have revised their uninsurable conditions. Again, I'm not going to read it, but they have very clearly stipulated what conditions are there, and comorbidity is no longer an issue. So on their application, there were basically 12 yes-no questions. And if you answered, I can't remember whether it's yes or I think it's if you answered yes, that was basically an automatic knockout. Number 12, which focused on comorbidity. Look at all the, the different conditions that you could have: arthritis and asthma, urinary incontinence with, heart bypass or heart attack. Question 12 no longer needs to be answered on the application. Now, the company is revising their applications, but at the time that I was doing this or preparing for this presentation, they have to file them with states and get the okay to go. But right now, you need to know that the company is committed to easier underwriting, helping agents be more successful. One of the things, as I said at the very beginning, that I think is a great asset for agents who are selling this, especially for agents who are making phone or internet sales. And more agents are doing that because they just don't have the time, or the business formula to go out and see people. With the Standard Life product, you sell the concept and the plan amounts to your prospect. Then you conference in the Standard Life home office. They have a toll-free number. Their staff will complete the application over the phone. They do it Monday through Friday. There's a detailed sheet that gives you information, but basically, and I think it takes them about 20-25 minutes to do it. I recommend to the agent that you obviously stay on the line with them. After all, this is your prospect and client. But let me share with you why I think this is so great. And you can see that the bottom, a lot of people initially have resistance to this. But here's why I think this works. Yes, it obviously makes your job easier, but when you're selling over the phone and internet, and we deal with consumers all the time who are calling us, their number one concern is, who is this person you're sending me to? Are they an agent? They're going to try and force me into something that I don't want. I don't know them. I'm giving them a lot of personal information, a lot of health information, and ultimately I'm giving them financial credit cards or things like that. Who is this person? The consumer is going to feel so much more comfortable when they're talking to an insurance company employee who looks and says, no, I'm an employee of the insurance company. I'm here to answer all of your questions to make you feel I directly work for the company. This is, in my opinion, why this is just such a valuable asset that you need to consider and look at. And I asked Standard Life, I said, so how's it working for agents? And while they do not currently sell a heck of a lot of recovery care products, they sell a lot of final expense, and half of their final expense sales are made this way, where the agent just hooks the client up. A few final pluses. This one gets one smiley face. Credit cards. Standard Life accepts credit card payments, and people like me love points. Imagine being able to tell your client, hey, yes, you're going to pay this premium. Nobody likes paying anything, but you know what? Every other company requires that you do an automatic bank transfer or a deposit. You know, here you have the option. You can get points. So if you're redeeming points for cash, or if you're redeeming points for gift cards or travel, and 55% of cardholders say they redeem points for cash, what a nice little, oh, that's cool. I'd like some points, you know, etc. Two smiley faces, a few final pluses. As I say, this company has some real pluses. They have a leads program. I won't go into detail, but basically, when you're doing $5,000 in premium, they have a lead generation program that they offer to agents at no cost. That's an excellent plus because, heck, generating leads is a tough enough job. They have excellent agent support and online information. As I said, if you're appointed and you have questions, their people will talk to you and answer your questions. If you are not appointed, you know, when we have an agent that wants to get appointed, all that we have to do is provide the agent's name and number to Standard Life, and they will take it away. Their staff will call the agent, get everything done. It's just, I mean, it's sort of old world service. And lastly, I asked, what's the typical recovery care policy issue timing? It's 5 days. That's important today, especially compared to long-term care insurance policies when it can take so long. Now, remember at the beginning I said there are 4 states where it's the same product, the same service, same pricing, everything's the same, but in order to have that product available in the state, the policyholder has to agree to be part of the National Consumer Alliance, which is basically one of these senior savings or savings programs. So they basically, I looked at the website, and I think the first month is free, and then there's $1 a month charge, or it might be that the first month is $1. But the bottom line is once the client signs up and once everything's in place, they can cancel if they look and go, oh, heck, I don't need, you know, a prescription drug benefit or a health and wellness or security and emergency discount. Cancel the benefit. Nothing impacts the policy at that point. It just helps you get this great coverage. And lastly, for those of you who are members working with us and distributing products under the Advisory Center's hierarchy, I want to remind you that one of the benefits that we provide to our agents is not just training and education and like that, but we create really good generic marketing tools. When you make a sale, you let us know. We will personalize one of these tools for your use, your name, your phone number, your contact, and we will send it directly to you for your use. And if you're not appointed with us, well, we're glad to talk to you about, you know, the benefits of what we can offer you, marketing support, education, this kind of training that you've just watched, and helping you be successful is certainly in our wheelhouse and one of the many reasons that I think people work with us. So I want to thank you for watching today's presentation. I hope that it has helped you gain a good understanding of 2 things. First, why I so passionately believe that short-term care insurance is not just a viable option, but an especially viable option for women who are alone, and why I believe that the Standard Life Recovery Care product is an ideal solution for you to start offering to your clients. If you have questions regarding this, please feel free to email me at jslome@shorttermcareinsurance.org. I do my best to answer everybody's questions. And if you would like to get appointed with Standard Life or with any of the other insurers that offer short-term care insurance products, please don't hesitate to call us. We are only too glad to help you. Again, thanks for your time. Thanks for your support. And we wish you lots of good selling and good success. Thanks.